One thing I would say though about barter in environment where the currency is collapsing is that it takes the economy or people back to honest values, because at least they're exchanging something of value for another thing of value, not worthless paper. Monday, March 25th, 2024, Maneko 64, home of alternative economics and contrarian views. So I hope you all had a very good weekend. And the topic today will be how the road to currency collapse, or hyperinflation if you want to call it, is paved with debt. Yes. And I have a feeling, even though we've seen the debt load increase massively since 1971, I think the last 4 years have been the spark that will lead to a collapse. When it will be is difficult to say, but I think we're getting closer and closer. So I'm going to recommend a couple of books that a lot of you already have probably read, but some of you who are new to the channel probably haven't. And I think there are two really good books that explain what happens, not just to the economy, but to societal norms during a currency collapse. And before I go further, I just wanted to let you know that Miles Franklin, my precious metals affiliate in the United States, they have some specials still. They've got a 1/10 of an ounce gold maple leaves, only $35 over melt. They've got 1 ounce silver Krugerrands, only $3.10 over spot. So, as I've been saying and as I've been doing, the only way to protect your liquid savings, not just during an inflationary period, which we've had, of course, since 1971, and especially since the beginning of the century, is to stack gold and silver. You might not want to do it, but if you're considering it, give them a call on 1-800-822-8080 and tell them that Mario or Maneko 64 sent you there. You can also email them and tell them info@milesfranklin.com. And of course, here in the UK, I've got Gold Investments as an affiliate. He's got a few specials going, Oliver Temple, and the details are below in the description. Back to hyperinflation. The interesting thing about hyperinflation, and I even have a playlist about hyperinflation. I've done many videos. And why have I been so, I guess you could call, obsessed with hyperinflation? Well, because many years ago, over about 20 years ago, maybe even a little more, I read this book, Fiat Money, Inflation in France, How It Came, What It Brought, and How It Ended, by Andrew Dixon White. Highly recommend the book. It's not long. It's easy to read. Andrew Dixon White was one of the co-founders of Cornell University, and he wrote this book back in 1912. He was U.S. ambassador to France during the 19th century. So he was a very knowledgeable individual, and this is what it says here about fiat money inflation in France. And you will see the similarities are striking with what's going on, not just in the United States today, but all throughout the West. In 1790, the French people, by general acquiescence, embarked upon what they believed to be a harmless experiment in currency inflation. The results of this action are vividly described in Dr. Andrew Dixon White's book entitled Fiat Money Inflation in France, How It Came, What It Brought, and How It Ended. Well, when I first read this book around 2002 or 3, could have been even before that, I started looking really into free markets and the history of money around that time, maybe a little earlier. We hadn't had QE, which is an experiment in currency inflation. And people might think, what are you talking about? Well, QE, when the central bank creates bank reserves or central bank money out of thin air to buy government bonds, what that does is that creates currency for the treasury, and then the government can go and take that currency and spend it into the economy. It creates also reserves, extra reserves for the banking system, the private banks, and they can go and lend out to individuals, to corporations, and by lending out to them, they create currency and they deposit that currency into their bank accounts, and it inflates. So that's why debt in our current debt-based currency system is so inflationary. And the problem with a massive amount of debt that we have is that it creates more and more inflation. What's the solution to that? Well, it's not fiat money, it's sound money, of course. That's a different matter, though. So let's continue here. It says, the story of fiat money inflation in France is one of great interest to legislators, to economic students, and to all business and thinking men. It records the most gigantic attempt ever made in history of the world by a government to create an inconvertible paper currency and to maintain its circulation at various levels of value. Well, I think the central banks of the 21st century, they've wiped the floor with the experiment in France in the 1790s. So let's continue here. It says, it also records what is perhaps the greatest of all government efforts, with the possible exception of Diocletian's, to enact and enforce a legal limit of commodity prices. Sounds familiar? Yeah, there's still people out there who think that the gold and silver market and other commodity markets are completely free, that the bullion banks and others do not manipulate these markets, which I find amazing. They're just, it's okay. They will accept that the stock market, the bond markets, currency markets are all manipulated. And talking about currency markets, we just had some news this morning. Thanks to Gold Telegraph, it says Japan's currency chief says the country will take appropriate action against excessive fluctuations in the yen without ruling any options. Boom. He's clearly referring to the possibility of an intervention. Who is ready for another week? So there you go. It's happening today as well. And if you understand money and currency, you know that money, gold and silver are the most marketable commodity. Every fetter that could hinder the will or thwart the wisdom of democracy had been shattered. And in consequence, every device and expedient that untrammeled power and unrepressed optimism could conceive were brought to bear. But the attempts failed. They left behind a legacy of moral and material desolation and woe. Sounds familiar? I mean, the world we live in today, some people worry about sending rockets to Mars or back to the moon. I'm not sure about back to the moon, but they worry about AI. But I think our biggest problem is, the lack of morals and honesty. And without that, you can't have a sound money system, and everything implodes, just like it's doing right now. from which one of the most intellectual and spirited races of Europe suffered for a century and a quarter and will continue to suffer until the end of time. So yeah, it has huge consequences, inflation or even currency collapse. There are limitations to the powers of governments and of peoples that inhere in the constitution of things, and that neither despotisms nor democracies can overcome. Legislatures are as powerless to abrogate moral and economic laws as they are to abrogate physical laws. They cannot convert wrong into right nor divorce effect from cause, either by parliamentary majorities or by unity of supporting public opinion. The penalties of such legislative folly will always be exacted by inexorable time. While these proportions may be regarded as mere commonplaces, and while they are acknowledged in a general way, they are in effect denied by many of the legislative experience and the tendencies of public opinion of the present day. The story, therefore, of the colossal folly of France in the closing part of the 18th century and its terrible fruits is full instruction for all men who think upon the problems of our own time. So I saw this tweet yesterday from Fix the Fed, at Fix the Fed, and it says here, proposed 2025 budget relies on tax receipts magically growing by another $1 trillion. Jason Burak suggests deficits could rise as much as $3.7 trillion, depending on interest payments and existing debt. At this rate, we just might hit $40 trillion in debt. That's the national debt, the public debt, by 2025, not including unfunded mandates or liabilities. Insanity. So there you go. The CBO projections or estimates, yes, they're usually wrong. And that's why I'm saying the debt is getting out of control. And I don't think the powers that be thought interest rates would still be where they are right now. I think a lot of them a year and a half or two ago thought we'd be back to 2 or 1%. And I think unless they print even more currency out of thin air to buy these bonds, rates are not going to go down anytime soon, especially government bond yields. So this book here too, When Money Dies, by Adam Ferguson, The Nightmare of the Weimar Hyperinflation, is really good as well, because aside from talking about what was happening in terms of the monetary situation after the end of World War I in Germany, he talks about the symptoms, how society was in a moral decay, pretty much how it was in France, and pretty much how it's now, in my opinion. The world's gone mad and crazy in a lot of ways, and it's really difficult sometimes to stay focused because there's so many distractions out there. So yeah, I recommend this too. And talking about this last hyperinflation in a major Western country in 1923 Germany, where do I think we are right now? Well, I think the straw that broke the camel's back, so to speak, was 2020. Don't have to go over what happened then and then what has been happening since then. But the straw, of course, was all the massive money printing, the massive amount of debt, the major disruption to our economies by unnecessary actions from governments, locking people down, closing businesses. I think, yes, the last 4 years are akin to what happened, especially in Europe, from 1914 to 1918. And Germany, aside from leaving a sound money system, a gold standard, like all the other countries that were waging World War One, they went on and started deficit spending. They increased the debt. They didn't raise taxes like, let's say, Great Britain did. And by 1923, their debt was pretty much unsustainable, like the debt is now in the US and other countries. But they kept doubling down. They kept issuing more debt because they couldn't stop. And that's when the currency collapsed. And I think we're very close. It could be a matter of weeks or months or a year or two. I don't know. It's difficult to say. And hyperinflation doesn't happen through. It's not like a linear progression from high inflation. No, it's a psychological thing. It's when the general public they realize that the inflation will never stop, and they panic into getting rid of the currency for anything that's tangible and has value and is maybe durable or maybe not even that you can eat to survive. Yeah, it has nothing to do with the normal inflation. It's like, and as von Mises says, and as it says in this book, it will happen over a very short period of time. And we're not there yet, but I think we're very close. So just go quickly through what they say here. And I think this book was written in the 70s. It says the Prime Minister would do well to put copies of this fascinating history beside every bed in Chequers. Well, no chance of Sunak having read that, I don't think, nor Jeremy Hunt. In 1923, with its currency effectively worthless, the exchange rate in December of that year was $1 to, I think it's about 4.2 trillion marks. So many zeros. And it's getting like that, isn't it? Billions and trillions, quadrillions. The Weimar Republic was all but reduced to a barter economy. And that's why it's important to have those small constitutional silver coins or those small pre-1920 sterling silver coins from the UK. Expensive cigars, artworks, and jewels were routinely exchanged for such staples as bread. A cinema ticket could be bought for a lump of coal, and a bottle of paraffin for a silk skirt. In desperation, the Bavarian Prime Minister submitted a bill to the Reichstag proposing that gluttony be made a penal offense. Crazy laws, right? We're seeing that nowadays too. His exact definition of a glutton being one who habitually devotes himself to the pleasures of the table to such a degree that he might arouse discontent in view of the distressful condition of the population. One thing I would say, though, about barter in an environment where the currency is collapsing is that it takes the economy or people back to honest values, because at least they're exchanging something of value for another thing of value, not worthless paper. So I'm going to stop here and we'll just quickly look at the markets this morning. It's 8:30 a.m. London time. We haven't changed our clocks yet like you have in the US. We're going to change them this coming Sunday. So we've got spot gold up $1 at 21.66, or the dollar is 1.2166 of an ounce, if you want to look at it like that. And maybe that's how we should look at it, or how we should definitely look at it. Anyway, the high overnight has been 21.78 and the low has been 63. Silver is also virtually unchanged. It's up a cent here, 24.68. The high's been 90, the low 54. The stock market indices are virtually unchanged, so I won't go through them. And the only currency I see here moving a little bit is the dollar. That's down about 0.4% versus the yuan, just below 725. Let's quickly look at the commodities markets. Brent WTI crude is up slightly, just below 81. Brent as well is at 85, up slightly. What about cocoa? Well, cocoa continues to go through the moon, to the moon. It's not there yet, probably. It's up almost 4% at $8,544 per ton. High-grade copper is up 0.33%, trading at 404. And platinum, that's up $4, trading around 900. Just quickly look at the bond yields, and bond yields, of course, have been fairly steady. One thing I would say, though, do they really mean anything, these bond yields? I don't think so. I spoke about yesterday in the live stream that even Larry Summers, who was Secretary of the Treasury under Clinton, he took over from Robert Rubin, of course, who was also Secretary of the Treasury. He kind of admitted in Forbes magazine that the real rate of CPI, or what they call inflation, in 2022 was more like 18% if you calculate it like they did in 1980. So are you really getting a good return from treasuries if the real inflation, which has dropped, of course, from a little bit from 2022, is more like 10 or 12? No, you're losing about 5 or 6%. And interestingly, gold up until now is up about 4.5% year to date. If you annualize that, you get to around 22%, which is more of a protection, I would say. Yes, we could see the price of gold move. I do still expect a lot of volatility, not because gold is risky, but because the fiat currencies are getting more and more worthless. So I think you can find free PDFs, at least for this one, online. So you just have to Google Fiat Money Inflation in France, free PDF. You might be able to find one for this book. So highly recommend you read these, and it will open your eyes to what's happening today. And one thing I would say about the debt and these experiments with inflation is that once you start, it's very difficult to stop, and that's where we are right now. So with that, I'm going to wish you all a very good day. Take care. Bye.